My name is Obaid Khan. I'm a chartered accountant. I'm a partner with OS who just presented a session. I would like to thank and express my gratitude to Dr. Khizer Hussain Junaidy for giving this opportunity and for each one of you for taking out your time, being present here and showing that you guys are on a step for being financial aware for all your transactions. Now I know you have gone through a huge information that is different from your daily, actually your profession. So there was taxation, there was accounting. This is something very new and so much of information might confuse you. And sadly, my topic also revolves around a bit of taxation, but this is financial planning. Now, financial planning is a very broad term. For someone, financial planning might mean investing. For someone, it might mean how you decide on loans. For someone, it might mean how to save. So it's a very broad term and it has a lot of implications and a lot of separate fields within itself. You might also hear about wealth management. They take a part of it. Now, as a chartered accountant, I am giving you a broad idea about how you can retain. Once you earn something, it is as important as it is to retain that same amount and not to lose that amount on silly mistakes. That also falls under financial planning. Financial planning is not just investing and growing your money, but at the same time saving what you have actually earned with your hard work. So my topic will be more towards financial planning and how you can save. Now it's a very big topic, but I have tried to bring in some relatability that you can connect with your real life. So we will be first diving into the credit card aspect. Now because this session is 30 minutes and I couldn't bring in much practical scenarios, I have brought one practical scenario which we come across from many doctors, not only just doctors, from every month. Credit card is a very good tool, but how you use it defines whether it is good for you or whether it is harmful for you. Now we have come across many people who use that tool which indirectly harms them. So because this is more on financial planning. Now what is a credit card? How does a credit card come into picture in the real life? You have a source document that is a PAN card. A PAN card is linked with your bank account, and from bank account it is linked to your financial transactions, and from financial transactions every time it is being reported. So say for example in a month you have swiped your credit card for 1 lakh, which is your credit card limit, and you have swiped that every month for rotation of the business, not you but the person who has taken your credit card. It shows to the income tax department that you have done every month 1 lakh of expenditure, which accumulates in the 12 month or 12 lakhs. Now when everyone is filing their income tax returns, they will show income if relatively less to 12 lakhs. The question arises, how did you get the money to spend 12 lakhs when you're earning less than that? And that is when income tax comes into your picture, and that is when usage of credit card becomes harmful for the person. We have come across several notices where people say that my credit card was not used by me, but it was used by my relative for his business, and he has done the transactions. This is a practical scenario, but again, income tax department does not listen to these excuses and they'll issue a notice. They will say you have expended more than what you have earned, and we are of the assumption that you are earning secretly some amount which you are not reporting to us. And that is how your credit card becomes a problem for you. And that is what adds the risk to it. And how does it link to financial planning? Well, not giving your credit card to someone is one step of the financial planning, which is a very basic step, but it adds up to it. There are other charges. There are other things like high interest charges, hidden charges. It affects your credit score if you don't pay on timely basis. That is a build up again to the tension. But it is not that it's completely dangerous to you. The impression is not to scare you from credit card, but it is to also provide you that it also has its own benefits. It can give you a leverage when you don't have something for an amount lying in your account for emergency use. You can use credit card to clear the transaction on an immediate basis and then plan for the amount in next 10 to 15 days and pay for it. Now that is a help that you get from credit card. You have interest-free period, you have rewards and cash back. These are some small financial benefits that you get from credit card. Emergency credit and budget input. It gives you a track when you use credit card for a specific action or a specific business transaction. It gives you a track of your expenditures. You don't have to maintain it very cautiously in your bank statement in your savings account. That is one of the positive aspects of credit card. Now again, the whole point revolves around SFT. What is SFT? SFT is specified financial transactions that are reported to government, that is income tax department. It is a small radar You can say, well, if I go into technicalities, it will again make you a little bit heavy on the information. But to give you a simple analogy of that, it is basically a radar placed by income tax department on major financial transactions. They don't want to scrutinize, they don't want to waste time on seeing every transaction that you have done, but they just want to, on an overall basis, with a simple parameter, catch your major transactions. Now, what are major transactions? You'll get an idea that you put any cash savings, like when you deposit cash, you might have come across the situation when you're depositing cash, the bank will ask you a PAN copy or PAN number. Why? Because they wanted to report it to be to the government. It is the responsibility of the bank that they have to report this whether or not to the income tax department. SFT is that radar. That is why they do it. When you put cash in your current account, when you pay your credit card bill through cash, when you buy, purchase house or flat, sub registrar reports. Now, why they are doing? Why these agencies are reporting it to the income tax department? It is because income tax has made it mandatory for them that if you're such an organization, they are known as reporting entities, and these reporting entities report this financial transaction on a PAN basis. They don't know who you are. They just have a PAN number. They know that this transaction happened and they report it. And that is how income tax departments keep a track of major transactions that you have done in a year. And that transaction should match with what income tax filing you have done. Say, for example, a person purchases a flat of 25 lakh rupees, but he has never filed an income tax return. Now, government will raise a simple question or send a simple query to you. You have never filed an income tax return, meaning that you're saying us that you haven't earned anything. But then how did you purchase a flat of 25 lakhs? That is a very logical and reasonable question. That is how SFT helps them track money which is not getting reported and people are actually earning. And that is why SFT is something that any person should have a little knowledge about, that they should make themselves aware that if they are doing this transaction, we know it will be reported to the income tax department. So we need to plan accordingly or discuss with your financial advisor or a chartered accountant before making any major financial decision to see whether it matches with your income tax reported or not. Why does SFT exist? Basically, it exists for income tax department. It is a gift to them. They get all the information from all the reporting entities and they want to see what has been disclosed in an income tax return. And basically, it's just a ready-made information for them to question you. They don't have to put any manual effort. The transaction that gets reported. Now the question is, okay, even if they're getting reported, how does it affect me? I mean, how does it affect you? It automatically shows up on your income tax portal. Just in the last session, OS has mentioned that you need to be aware of your income tax credentials. What does he mean by that? There is a website by the income tax department that is an interface between you and the income tax department. They are saying what data we have, we will put on income tax portal. You also come on that same portal and check whether it matches with the information that you have at your end. So basically, it's an interface. This information is reported there on income tax portal. So when you go there and when you see that there is 25 lakhs of transaction of a purchase of a property, that will give you an insight, oh, how to report this in my coming income tax status. That is how it helps you. SFT will say you have deposited 10 lakhs of income or 10 lakhs of cash. Now, if you were to report your clinic income of 8 lakhs on an estimate basis, because not everyone can have an accountant. Initially, not everyone requires an accountant. Only when it grows or when there is so much of transactions, you would think of an accountant. So you would think on an ad hoc basis, I can say 8 to 9 lakh is something that I have earned. But when SFT clearly shows that you have deposited 10 lakhs of cash income, you would then in your income tax filing plan that, oh no, I cannot show 8 lakhs. I have to minimum show 10 lakhs of cash deposit because it is already there on income tax portal. So that is why knowing SFT, knowing income tax, you don't have to really know about in detail, but keeping an idea and discussing with your financial advisor or your tax filer is really essential. And why is that in financial planning again? Because it will avoid notices, it will avoid unnecessary penalties that you have to pay just because you didn't know something. And that is how you're saving money. Financial planning starts when I have surplus to invest. Like, that's a myth. People, not a myth. I think that is a general understanding of the people that when they hear about the term financial planning, they will assume, oh, when I have something, maybe that is financial planning will come into picture. Only when I have money, I have to reach out for financial planning. Even to retain something is financial planning. That is a common misconception, you can say. Now, why I'm saying that even if you don't have money, you should know about financial planning is to save your leakages. What do I mean by leakages? Say for example, you have earned 6 lakhs of rupees or maybe 12 lakh of rupees in a year as a doctor. You did not know that you had to file your income tax return. Income tax return is something that has to be done financial year basis, that is every year basis. After 2-3 years, you get to know, oh, I had to file my income tax return for the previous years as well. Government will say, we don't allow you to file your income tax return on a previous information basis, but still we will allow you, instead of paying 10,000, which was actually your liability, now you add another 50%, you add interest to it, you add penalty to it, and now you pay 25,000 plus. So just because you have delayed your filing timing, you will have to incur double the amounts which was actually to be paid. And that is how the extra amount is a loss to you. And that already you are incurring a cost of income tax, and then incurring a late fee cost brings you a heavy, we can say, challenge on your financial transactions. Non-compliance. Sometimes when you're purchasing something, you're supposed to deduct tax. Now government is of the idea that when a person is doing a major transaction, he is aware of his financial responsibilities. But because on practical, on ground, not everyone is aware of their financial responsibilities, and they will not deduct their tax before paying to the seller, and then just pay 25 lakhs completely to the seller. But income tax says you have to deduct 1% and pay the remaining amount. Now, because of the simple step which you have missed, you will have to pay tax liability interest over and above the 1%. Cash deposits, like I said, SFT, lending PAN credit cards to friend, falling prey to high return scams. Yeah, recently we might have come across many news where doctors have fell prey to some, you can say, not so very good people in the society who wants to lure doctors, because we know, like doctors said, that the financial responsibility is huge for a first generation doctor or any doctor, and they try to maximize the returns, maximize the amount that they have, and in that scenario they are looking for the opportunities to maximize. And in that scenario, when they come across a high paying return, you can say, policy or an investment, they get attracted by it without doing due diligence. Not everyone can do due diligence. Sometimes it is just a basic idea that we give to our clients, that you need to make sure that if it is a very high paying return, likely there is something wrong with it, because then everyone would be doing the same thing. So basically saving yourself from high return scams is also one of the financial planning aspect, which we don't know. We assume it's a simple thing, but there are many doctors who lose amount lakhs and crores of crores, when you can save crores and lakhs by just making a small decision to not go after it. That itself falls under financial planning. Emergency savings, that is a very important point. See, even when we start as a professional, from my personal experience and from the experience that I've gotten from my clients, not everyone tells what you have to do, because it is not possible. Someone might earn some amount of money, someone might be in losses, so it becomes very difficult. So what is something that you can do? See, we give them a very simple answer for initial purposes, that anything that you know is today your expenditure, every month you have to pay, irrespective of whether you're earning or not. Your rent, your electricity bill, your telephone expenses, your family expenditure. Just make an ad hoc calculation of that amount, multiply it by 12 months, and make sure that you're saving that amount in a liquid form, because we don't know what tomorrow is in store for us. There is a basic financial rule that you should be in a position to invest only after securing your next 12 months. Once you secure in a liquid form in your, say, FDs or in your savings account, in cash or in gold, then you know that you can now, whatever surplus amount you have, you can use it for high paying returns like shares, mutual funds, debentures, NCD bonds, PPF. There are multiple of options, but it is not like that if you invest in it, your money will grow multifold. It is just a different way of earning some amount over a principal amount. So it is important that you build an emergency fund, because doctors are very hardworking, but at times they fail to realize the value of having an emergency fund. You really need to have emergency fund so that you don't have to ask anyone some amount. That not only is it financial decision, but it's an emotional decision when you have to ask someone for the amount. So make sure that somehow, by some planning, you are saving for next 10 to 12 months in case of any emergency, whether it is basically a financial safety net protecting you from unforeseen circumstances. Liquidity is the key. You go for FDs, you go for high interest savings account and keep money handy in your bank account. Lifestyle inflation, like Dr. Khizer mentioned in his session, that is one of the pressures that not only doctors but everyone have in this today's high reels, when people come across reels and see others' lifestyle. So that is one thing that is an important part now becoming in the financial world, where people are actually saying to save yourself by seeing others what their financial lifestyle is. Loan and investment traps. Again, this comes to the point that you don't have to really fall for these traps. Make sure that if you're not aware about the policy of high return, you're discussing with someone, you're discussing with your CA. Many of the times when our clients come across some really good paying policies or systems, they come to us and they ask us whether it is genuine, whether you think this can possibly done, whether you think this will pay us this much. So we normally tell them that if it is something that you are not able to understand, it likely means that there is something wrong with it. Because anything in financial, you can say, subject is simple to understand if someone breaks it down to you. When someone is making it very complex for you to understand, it means there is some hidden analogy in it which we are not able to figure out. There will be some terms and conditions, it will be linked to market. If cryptocurrency falls, you will not be able to pay. Because everyone is in the growing world is on an assumption that market will do well. No one will say you that market will go bad. If they calculate what will happen if the market will go bad, no one will give them even a single rupee, because no one would like to lose money. So that's why the whole investment parts come on an basic assumption that the amount market will do really good. But we all know, we come across news where market is not doing good, where market has fallen, there is an war somewhere happening, and everything in life is connected to the markets. So make sure you're not falling for the traps. Cryptocurrency ho gaya, shares market ho gaya, everything. Now to give you a simple idea, a 15% FD was a 50% penalty. See, consider an impact. 1 lakh invested in 7% of FD could grow you an amount of 7,000. That is 1 lakh 7,000 in a year. However, the same 1 lakh is spent on a credit card and left unreported would result in a cost of 1.5 lakhs. What I'm trying to say here is, if you keep an FD 1 lakh rupees and if it is giving you 7,000 rupees, you will say it is a very small amount. Why should I do that? Instead, I will give this 1 lakh rupee to my friend. That is my credit card. He will work on it and he will give me maybe 20,000 rupees back. But if that attracts notice, you will have to pay 1.5 lakhs. Instead of getting, you will have to pay. So sometimes some small amount, which is something that you're getting in a very easy manner, is comparatively easy than giving your amount for something you don't understand. And that is where again financial planning is a part of it, that you're aware about it. Over with the CA, carefree, confidential. We come across a lot many times that people say, you have this client, we know him. You know this doctor, we know him. And they're afraid of the fact that we might share information of one doctor with another doctor. Now, like in medical field, you have, I think, National Medical Commission Council and IMC, where they say you have to protect your patient's confidentiality, what treatment you have given to them. You cannot just inform about it to anyone without the prior confirmation and consent of the patient. In the same manner, we are liable to safeguard your financial information. Even when income tax question us, we have to be careful in answering about whether we can share your information or not. So this myth of that one person's information will be shared with another person's information is wrong. If you know that a professional is good and he is answering questions really good, or he is able to explain you in simple terms what you want, but just because of the fear that he might share our information with someone else, should we go approach him or not, or whether our colleagues will get to know about it, I don't think that is really a fear that you should be aware about. There might be some people who are doing that, there might be someone who is doing which is a non-social element, but not many. 99% of the CAs are aware of the professional code that they have to follow to keep the information confidential. Contrary to common assumptions, chartered accountants strictly adhere to professional confidentiality norms. You are supposed to keep your financial information very secretive. So don't worry, whenever you find a good professional, approach them, discuss on a very personal level, and he'll 100% help you. Why ITR filing is linked with financial planning? Now, this is a very good question, I think. Now we are on the last slide. So just to catch your attention, why ITR filing is linked with financial planning? Like Dr. Khizer highlighted and Ubaid highlighted and Mas also highlighted, that it is it is required, not people understand that. See, back, I would say in 2018, prior to that, income tax department did not have a very good system to capture all the transactions and get an idea about it. Now they have really transformed their system. So they are aware. I'll tell you an example. There was a person who came to us saying that he has almost 55 lakhs in cash, but he is unable to buy a Mercedes car. Now, do you really think a person who is having that kind of an amount and still not being able to buy a Mercedes, is it really good to have that kind of a wealth where you are not able to use it? So that is why again ITR filing comes into the picture. Said report your incomes. Having wealth which you cannot use or you're scared to use is not at all a point. Yes, you might be at a point that I don't want to really pay this. But to understand a bigger picture, you have to report incomes to your government. You have to pay taxes on it so that in future, when you accumulate wealth, without any hesitation and peace of mind, you can sleep and buy assets. You don't have to worry whether I should buy gold. There are people asking us, can I buy gold? Can I buy car? Can I buy flat? The simple answer again stands to that whether you have filed your ITR, and if you have filed, how much of the income tax you have filed. Because it is simple mathematical. If you have shown income of 50 lakhs, you can do anything with an amount of 50 lakhs. If you have not shown even a 1 rupee, buying 10 rupee of pen is also a costly affair for you. So it is again a comparison that you do. So again, fine. I'm closing on a small note for financial planning. Key takeaways is avoid credit card traps. You save money. You save scrutinies from income tax department. You save penalties. Big emergency saving. Small step but very helpful. Invest wisely, that is, avoid huge returns and scams. Opt for disciplined SIPs. Mutual funds are not that very lucrative in returns, but they give you some amount of safeguarding for that amount you've invested. Maintain good credit health. Protect your CIBIL score. Basically, CIBIL score is something, it is a history about your financial transaction and how scheduled payments you have paid on timely basis to the banking system, and that is how they help you while giving loans. When to meet a CA. See, there is a question we get asked from people. I didn't know that I have to meet a CA. When should I meet a CA? Meeting a CA is not related to your income. CA does variety of works. Income tax, consulting, accountancy, EPF, yes, there are many things. But to get an advice by paying some amount and taking consultation is never harmful. By paying 1,000 rupees or 500 rupees, you can save lakhs of rupees on notices. So always when you're doing a big financial transaction as per your idea, which is exceeding 2.5 lakhs. If you're earning more than 2.5 lakhs in a year, approach your CA, get an understanding about it. I've started earning, what should be my next step, and he'll help you on that. Due date for this year for filing ITR is 15 September. So all of you who are earning, make sure you file your returns. If you have not filed, you can approach us, not a marketing stream, but an information. Smart financial planning strategies, avoid penalties in saving and clean finances. Remember, doctors save lives. Smart financial planning saves the money you work so hard to earn by keeping it grow and by shielding it from preventable ills. Thank you for your time. Your financial well-being is in your hands. Start planning today. So to conclude, thank you for your attention. I hope my session was somehow given you an idea about it, if not in depth. Like Uwe said, if we get a chance, we'll go more in detail. This was more to give you an idea to safeguard from practical scenario. Thank you so much.